to Startup Street. I'm Shruti Mishra, and with me is Arundhati Ramanan. These are the top headlines from the startup space. Zomato is in talks with Paytm to buy its movies and ticketing business. Both companies confirmed the talks while also adding that a disclosure is not warranted at this stage.
Ixigo makes a bumper market debut, lists at 48% premium over IPO price. The IPO, which was open for bidding from the 10th of June to the 12th of June, witnessed an overwhelming response from investors with an overall subscription of 98 times at close.
Leo One, an edu fintech company, has raised strategic investment from the Indian cricket captain Rohit Sharma. This marks as Rohit Sharma's first ever investment in a fintech startup. Investment will be used for innovation, technology and expansion.
Rocket, a D2C beverage brand, has raised 6 crore rupees in pre-seed investment round led by Sauce VC and Roadies fame Ranvijay Singh. The company is focusing on an omni-channel presence, starting with North Indian states and gradually expanding pan-India.
Water, a packaged drinking water brand, bagged 5 crore rupees in pre-seed round at a valuation of 52 crore rupees. The capital will be used to expand its distribution network, optimize production processes and increase number of carts, strollers and kiosks to cover more high-traffic areas.
The startup behind You.com, Suzy, is raising $50 million in fresh capital as it seeks a foothold in the growing market for assistance with artificial intelligence. Reuters reported the near-finished Series B funding round would value the 4-year-old company between $700 to $900 million.
Google's AI assistant Gemini is now available as an app for Android smartphone users in India with support for English, Hindi and 8 other Indian languages. For iPhone users, access to Gemini will be rolled out through the Google app over the next few weeks.
Those were the headlines that we're tracking for you this evening, but the late Travenews Technology, the parent company of travel aggregator Ixigo, made a stellar debut on Dalal Street. The stock listed at a 49% premium over its issue price. The company's 720 crore rupee public issue received robust response from QIB and HNI category. The company plans to use the proceeds from the issue to fund its working capital needs, invest in cloud infra and finance potential acquisitions. Mangalam Malu is here with all of those details. Mangalam?
It's a big bumper listing indeed, an 80% up move is what we are seeing on the stock of day one itself. And there are a couple of reasons for that. The first one, of course, is that the IPO itself saw extremely strong demand. It was a 740 crore IPO, of which fresh issue was about 120 odd crores. It saw an overall subscription of nearly 100 times, led by qualified institutional buyers of almost 107 times and HNIs as well, 111 times. So big demand led to belief that maybe the opening would also see some follow-through buying, and that's exactly what happened. At 49% premium as well, there were buyers enough to take the stock higher to up to 80%. What does the company do? It operates online travel bookings under the platform Ixigo, something that we would all know. But what's important is while they allow train tickets, flight tickets and bus tickets along with hotels, they have nearly 83 million monthly active users across all the apps, and they are the highest users in tier 2 and tier 3 cities, and 50% of the demand over the next decade is expected to come from tier 2 and tier 3 cities itself. Among all the other listed online travel apps that we have and sites that we have on our bourses, this is the one which has the highest exposure to Indian Railways. In fact, they have over 50% market share in train bookings in India. The big opportunities for them going forward. In December 2023 itself, they started their hotel business. So the hotel bookings is something that will lead growth going forward. And because of this, cross-selling and upselling are big opportunities. Those who are looking to, book train tickets, perhaps give them cheaper flight tickets, or those who are looking to go, to a certain place, give them hotel options as well. And higher share of revenue coming in from ads is something that will flow down to their bottom line immediately. What are the risks? Because of their high exposure to Indian Railways, higher IRCTC charges may impact their profitability, as would lower take rates, increase in competitive activities, and lower than expected growth rate in tier 2 and tier 3 cities because their high exposure to these places would be risks. For the first 9 months of this year, they've done revenues of almost 500 crores, margins of sub 6% and a net profit of roughly 6.5 crores. Now, most on the street are penciling around 50 crores of profitability in FY25, give or take all the operating leverage and growth parameters that the company have. So even at an outer limit, if it does do, over 800 crores revenue in FY25 with 50 crore net profit, the company is still trading at 7.5 times price to sales and almost 120 times price to earnings. So yes, it is a strong business opportunity, good growth, but at an 80% premium to its issue price, it's trading at over 120 times price to earnings. It is a little punchy.
All right, Mangalam, thank you for those details. Appreciate you joining us. On the hot seat today, we put the spotlight on Zoff Foods that specializes in premium quality spices. Founded in 2018, the D2C brand claims it is the first in India to use air classifying mills which grind spices while retaining their original flavor and aroma. To talk to us about the road ahead at Zoff Foods, joining me now is its co-founder, Akash Agarwal. Akash, welcome to Startup Street. First, talk to us about Zoff Foods' scale and reach. Where is your manufacturing plant? What capacities does it have? And then tell us which markets are you eyeing, which markets you're presently in, and on what platforms are your products available?
So we started this company in 2018. So we have our plant in Raipur, Chhattisgarh. We started from here. So as if now we are a D2C first brand. So we have presence all across, and we are present mostly across all the platforms from Flipkart, Big Basket, and all the quick commerce like Swiggy, Zomato, and Swiggy, Blinkit, and Zepto.
Take us through the capacities that your manufacturing plant currently has.
So we can manufacture around 1,000 ton per month.
Okay. All right.
Of spices.
Okay. Akash, take us through your current business growth numbers, the kind of sales you have done so far, and what is your top line looking like? And if you could also give us a sense of the revenue split between online and general trade.
So we closed FY24 nearly 100 crore, and going ahead, we're getting like more than 160 crore in FY25. Major of our business comes through online platforms. So 60 to 65% is through online and 35% is through offline.
Okay. Let's now talk about the purity of spices that has currently come under the lens recently, with big brands facing questions on the purity of their products. So Akash, tell us, how do you ensure premium quality and transparency throughout the chain?
Spices has always been in radar in terms of adulteration, like from last 10-15 years. And we have talked about this in one of our ads. And currently we are seeing that. So to make sure that we come across a good quality spices product, so we have an art of a state plant where we have a cleaning line for different spices, then we have a grinding line. It's a completely automatic process. So whatever lot we procure, so we try to, analyze this in our lab to check whether the quality is proper or not. Once the quality test is being done and it's passed, then only we clean our spices and grind it, and then it goes for the packaging. So quality is the utmost priority which we look at, because spices is such a sensitive thing. It needs that level of quality.
Yes.
Otherwise, anyone can do anything in spices. So when we started, the first priority was to give quality product to the consumer, because they deserve it. Like, you cannot have a bad quality product to any of your consumer. So we try to, focus on our quality, and till now we have been able to serve like millions of customers with a good quality spice.
Sure. Akash, I believe you're also in talks to raise your Series A fundraise to the tune of 50 crore rupees. When can we expect the announcement? And if you could give us the details. I believe you're looking to dilute 15% of your equity. And what is the valuation you're looking at?
So we are at our advanced stage. Valuation is as per the market practices. So once the deal will be complete and we'll get the fund, then it will be announced that at what valuation we have done. But yeah, it's nearly to that.
How soon?
So maybe in a month or two.
Okay.
Final stage.
All right,
Yeah.
so you're in the final stages of the talks. But Zoff is also aiming to close the financial year 2024 at a revenue of nearly 100 crore rupees, like you mentioned earlier. What makes you bullish, Akash, and where do you see the next leg of growth coming from for Zoff Foods?
If you look at the market size, it's a 90,000 crore market, and it's growing at like 11-12% CAGR. So market is huge, demand is huge, because in India, you'll have always demand for the spices. And every player has opportunity in this market. So being a first e-commerce brand, so our focus is to reach the online customer first, and then going ahead, we'll go in the general trade market. And apart from this, we have few other products that's lined up like seasoning and condiments.
Yeah.
So from base and from the new products which we'll be launching very soon, I think it will help us in getting our next target for FY25.
Okay. Like you said, the demand is huge. The sector has immense potential, but it is also a fairly competitive market. So how have you priced your products? If you can give us an average, and also tell us what are your top 3 products, which are the best sellers?
So in terms of pricing, definitely we are a premium brand. We try to focus on the quality which our customer demands for. I think they don't mind being paying 2 to 5% extra. So we are a premium brand. But yeah, when we sell through e-commerce, we try to pass on some discount to the consumer through the platform. So we give some discount, but yeah, we are a premium brand.
Okay. Like you mentioned earlier, Akash, to enhance your product portfolio and add revenue streams, you're also working on new categories such as ready to cook and condiments and dry fruits also. How soon do you plan to launch them in the market, and what is the kind of impact you hope to make?
So seasoning and condiments will be launching by end of this month. And then we are ready to cook spices and flavored dry fruits. So that we are planning in the next 3 months.
Okay, so pretty soon. The deal's momentum in the 25,000 crore rupee branded spices and masala market has been high in the last few years. In fact, in 2020, ITC acquired Sunrise Foods. That was followed by Dabur buying a 51% stake in Badshah Masala. And last year, we saw Wipro Consumer who acquired Brahmins for an undisclosed amount. Would you be open to a buyout?
Our journey has just started. We are at very nascent stage. But yeah, 4 years, 5 years down the line, once we reach the fund and the level of scale which we'll get, we'll be planning this at that time. Maybe we'll go for an IPO, or maybe if we get some good offer. But as if now, not plan. The planning is to raise fund, to scale up, to bring good quality product to the Indian consumer and the worldwide.
Okay.
So as if now the plan is to just give good quality product to the Indian market. That's it.
So no buyout there, and you're also looking at an IPO, I believe, in the next 4 to 5 years. I understand that target, but if you could talk about the geographical expansion, any new markets that you'll be eyeing going forward?
Yeah. So as I said, like we are an e-commerce first brand and we have presence all across any platform we are there. So now our strategy is to scale our offline presence. So we'll start with the Chhattisgarh, as we are located here. We'll be covering the neighboring state. Plus, we'll be covering those states where we have a good presence over online. So this will be our strategy for the next 3 to 4 years. That we want to make our offline presence strong, and we want to become a first Indian omni-channel brand in spices.
All right. We've completely run out of time, Akash, but many thanks for joining us on Startup Street, and we wish you the very best for all your aggressive plans.
Thank you.
On that note, it is time for us to head into a short break. But coming up next, Bengaluru headquartered Technosport has bagged $21 million from A91 partners. That and more when we return. Stay tuned.
In India, ethnic wear is the single
Welcome back. You're still with us on Startup Street. Now, Bengaluru headquartered Technosportswear has bagged $21 million from A91 Partners. The company manufactures performance wear targeted at the masses. Now, with the fresh capital, Technosport plans to enhance its manufacturing capabilities, focus on digital brand building and marketing. Its network spans across 15 states and over 5,000 active retailer touchpoints. Joining me now to discuss this further is Sunil Junjunwala, the founder of Technosport. Sunil, thank you so much for taking time out and being on Startup Street with us today. You know, Technosport is a performance wear brand and it's a highly competitive space with many established players and new ones coming in, right? You claim that your products boast cutting-edge fabric technology. Talk to us about what sets you apart and why are you so bullish on this space?
90% of India can't afford Adidas, Nike, or other international brands, okay? But they offer a certain amount of comfort, performance, and convenience. When I talk about performance, there are certain parameters like moisture management, where we can absorb your sweat and dry it very quickly to keep you cool. There is UV protection, which can protect you from the heat from the sun, because when you're playing sports, you're predominantly outdoors. And there is odor-free technology, because when you sweat a lot, you tend to have sweat odor. So we call it antimicrobial technology. So these are certain technologies which were only available with international brands. The Indian brands were not able to give this technology. And when we started, we thought we'll bring access to this technology to the common man. And that was the vision of Technosport when we started it. And over the years, because of vertical integration in manufacturing, we learned how to do this technology at a very reasonable cost. And we are able to take it to the consumers at a very reasonable price.
So you're able to take this at a very reasonable price to your consumers. But, you know, before I get into it even further, this is your first fundraise since you launched the company. So take us through how you plan to use the $25 million that you've raised. What's new on the anvil?
Actually, we applied for something called PLI scheme about a year back. PLI scheme is something that the government came up with, and it had predominantly 4 pillars. One is, creating scale in the country, because India was not globally competitive, because most of the businesses were fragmented in small scale in the country. So they wanted to create scale. They wanted to create import substitution, because a lot of products were being imported. Predominantly activewear was being imported. So the government wanted to create jobs, and government wanted to, do product diversification, because India was very dependent on cotton and typical, fashion wear. So if we were doing these 4 things, government was incentivizing. So with respect to PLI, government said if somebody invests 100 crores in plant and machinery, government will give you certain incentives. So we thought we'll go and attempt the PLI scheme, because our brand was doing very well. There was a lot of demand, and we were trying to sort out the supply problem. So when we did the project, we realized that we needed about 170, 180 crore rupees. And we thought we hit the market to raise that money. And we successfully raised that. So it's going to entirely go into manufacturing, creating a state-of-the-art manufacturing facility for activewear.
Going into creating a state-of-the-art manufacturing facility. Now, as we were discussing, you're targeting the mass segment and you claim to be really affordable. So take us through your top selling products. Also, how affordable are you really? Give us a sense of the average price of the purchases.
Our t-shirts start from 300 rupees in MRP and go up to about 600 rupees. And our track pants start from 550 rupees and go up to 750 rupees. So this is the maximum retail price of our products. And, an average Indian would like to buy a set of a t-shirt and a track pant for 1,000 rupees. So this is our target market. And when we started with sportswear about 10 years back, we realized a lot of people who were having active lifestyle were appreciating this technology, because it was making a difference to their lives. People who have active lifestyles are basically blue collar workers. Now if you go to the countryside, more likely than not, you'll find a farmer using a track pant. Earlier he was in a lungi, now it is track pant. So when they have this active lifestyle, when they're sweating, when they're working outdoors, it is making a lot of difference. This activewear technology is making a lot of difference to their lives. And they're adapting to this very quickly. And we had, over the years, we realized this. And we started to build products for the actual use case. And now these blue collar workers buy a lot of our products. Yeah.
So from lungis to track pants it is, and you are a homegrown brand. So take us through your manufacturing facilities. Where are they? How much are you currently producing? And how much will you scale this up by using this fundraise?
So right now our production capacity is about 70,000 garments a day. And our production facilities are entirely present in and around Tirupur in Tamil Nadu. Now we're building a new mega factory in Perundurai in Tamil Nadu. And this new factory is going to be 100% run on green energy. It is going to be a zero liquid discharge facility. So it's highly eco-friendly with a very low carbon footprint. And it will increase our capacity to double in 2 years.
So it'll double your capacity in 2 years. But also, what's your presence like? You're online and across around 5,000 retailers in about 15 cities. So take us through what the strategy will be going forward. What's the online-offline mix at this point?
We have more than 22 super stockists across the country. Through these super stockists, we reach to more than 5,000 retailers, multi-brand outlets across the country. And currently, it contributes to about 90% of our business. Online contributes to about 10% of our business. We are also expanding to exclusive brand outlets. This year, we're going to have 12 exclusive brand outlets and grow from there on. So I think we are going to be available across all channels. We want to be present everywhere.
So you want to be present everywhere. Now, Technosport's operating revenue spiked 28% to 287 crore rupees in FY23, while your profits also jumped more than 2 times to 29.26 crore rupees during the same period, right? So take us through what your targets are for this financial year.
This financial year, we're targeting about 400 crores of top line, and we are looking at about 40 crores of EBITDA.
40 crores of EBITDA. India is not your only market. You're also present across Africa and UAE. So take us through your expansion plan and what's the revenue mix between the countries?
Yeah, we are looking at emerging markets. Of course, India itself has great potential. I think there's large potential to grow. But at the same time, we want to make our presence felt in emerging markets, where, firstly, we started to target UAE, where there is Indian diaspora. So the same product, same size is easily applicable for them. We also see Africa, Latin America, Southeast Asia emerge. And to build a brand, it takes a long time. And if you want to build a brand in an emerged market like Europe or US, it's very expensive. Whereas in the emerging markets, you can just simply be present and you'll grow along with the market.
Right. And so where will the next leg of growth come from for you? Any new products on the anvil, new categories you're looking at entering?
Yeah, I mean, we are in the fashion industry. Every 2 months is one season. Every 2 months, we launch like 60 products. So the new products is always a churn. But now we are also looking at new categories. We are entering sports towels. We are entering accessories like socks. We are also entering footwear very soon. So these are the products that we are going to do in the future.
So lots of exciting plans there. Thank you, Sunil, for taking time out and being on Startup Street with us. We wish you all the best on your journey going forward.
All right, moving on. Ethnic wear brand Libas has raised 150 crore rupees by IAF Series 5, a fund managed by ICICI Venture. This is the first external funding round for the decade-old company and will be used to strengthen its omni-channel play across key metros, tier 2 cities and beyond. My colleague Aishwarya Anand checks into one of its stores in Delhi to see how Libas has built a 500 crore rupee profitable brand. Take a look.
In India, ethnic wear is the single biggest category in the women's wear segment, with a share of 71%. In fact, 48% of women on an average spend between 1,000 to 2,500 rupees on ethnic wear per month. Now, considering the increasing spending power, the women's ethnic wear market is projected to cross $22 billion by FY26.
Well, this store looks interesting. Let's see what they have. The traditional wear segment in India is witnessing a remarkable makeover. It's not just about bridal fashion, which has been a mainstay of Indian ethnic wear. In fact, now the everyday wear is going indie, with fusion becoming the buzzword. The humble kurta has become a tunic, the dupatta can be worn as a stole or vice versa, and the pants have become the new churidar or salwar. Now, brands like Biba, Fab India, W have brought in this transformation, and today a whole host of brands are catering to this ever-growing segment. And that's what brings us here. This company started out as a fast fashion marketplace and over the years have transitioned into a D2C first omni-channel ethnic wear brand with its USP lying in a solid supply chain of networks. So what sets Libas apart from its contemporaries? Well, let's find out.
I come from a manufacturing, apparel, textile background. The go-to choice for me obviously was fashion. So as soon as I came back after finishing my graduation, I went onto the drawing board, started kind of, brainstorming ideas as to what would the right product be, how to do it, how to launch it, where to launch it, how to sell, because everything was very new. I mean, there was no success story that you could, replicate or copy because e-commerce was still in its early days. People, I mean, the word D2C, I think, didn't even exist in the dictionary back in the day. Wanted to establish Libas as a full-fledged D2C retail brand and started listing ourselves on marketplaces, and that's how the journey really started.
So, when you started out, there were already some established players in this space in the country. So, help me understand, even today, how do you navigate the competition?
We're always working within the same season. We're launching new styles every week, vis-a-vis a lot of other brands who probably curate a whole season and then launch it at spring, summer or autumn, winter.
How many styles do you have currently and what categories are you operating in?
So being like a ultra fast fashion brand, we've actually increased our pace of launching newer options to somewhere around 50 per week, 50 to 60 launches per week, which makes it about 250 new designs every month. We're trying to scale it up to about 150 a week. So we launched our a plus size brand just a year and a half back. We recently are on our way to kind of launch Libas Kids as well. We're also in the process of launching footwear and accessories.
How many units are you selling in a day?
As of now, we sell somewhere close to 15 to 20,000 orders per day. And we also manufacture somewhere around 20 to 25,000 pieces per day.
Premiumization, I'm seeing, is a very, very big trend that's coming up in the D2C space. So help me understand, how are you positioned?
So we actually position ourselves as a mass premium to a premium kind of a segment. The selection starts at somewhere around 3,000, 3,500 rupees and goes up to approximately 10,000 rupees.
The ethnic wear label adopted an omni-channel strategy 2 years ago and currently operates 15 stores across India. Libas is targeting a network of 150 physical stores in the next 3 to 5 years, focusing initially on metro cities and select smaller towns with a strong online presence and customer base.
Blinkit has now started selling kurtas and all. So is quick commerce now emerging as a category for you in terms of sales?
Definitely, it's a little challenging in the case of fashion because of the number of SKUs, then multiplied by the number of sizes and replicating that in, probably 50 to 100 dark stores across the country. But we definitely don't want to shy away from it. We are exploring the opportunity of, maybe starting small with a capsule collection. We're planning to launch the Libas into Kiara Advani collection on quick commerce so that, it reaches people as fast as we can, and especially during the festive season.
Where does your revenue stand?
So we closed our last year at an annual run rate of about 500 crores. We did it completely bootstrapped. We have been profitable since day one. In the next 2 years, we are eyeing a 1,000 crore run rate.
In addition to its domestic play, Libas is also addressing the Indian diaspora in markets such as the UK, USA, UAE and Australia, where it is serving through its online platform.
For the last decade, Libas has been upping its ethnic game, but now going forward, it wants to capitalize on this growing demand for fusion wear built on quick commerce sales, along with strengthening its omni-channel strategy. Now, for all this, the company has gone on to raise 150 crore rupees in external funding. And it's not just Libas. In the past few years, we have seen several fast fashion brands raise funds, and these include Snitch, New Me, French Crown, Rare Rabbit, among many others. Now, this indicates at a wider trend that's playing out where fast fashion is emerging as a big category in the fashion industry with the potential to touch nearly 29 billion.